Hi guys, welcome to Gold Today. This video is brought to you by the coach. Remember always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link of the Telegram room. At times when there are trading opportunities or important updates, we could reach you through the Telegram. Also, I do urge you to check out our last two videos in order for you to get the best of this video. We are going to start our call lists as usual after a quick recap. On the last trading session of Friday, we have been waiting for important economic headers to be released. For the manufacturing PMI for June and the market composite PMI both came below forecast. For the existing home sales month to month and the existing home sales for May both came above forecast. And the FOMC members, Mr. and Brenner, actually they give support for the gold with their comments about the intentions of the Federal Reserve Bank to lower or cut the interest rates. Actually, if it wasn't for the Federal Reserve Bank comments, gold was already sinking. For the gold price action on the last trading session, gold as expected, though we wish that not the case. Gold advanced directly toward 1400. Gold was shut down as expected about 1411. Gold recovered nearby 1383.82, then climbed back toward 1400. Gold took advantage of the news and the tension between US and Iran, added that the underperforming equities and the FOMC members comments, as we said. That's all. We're moving now to the strategy recap. In our last episode, we advised buying dips with keeping our eyes on above the level 1400. And also we said that gold is overbought and approaching the level 1400. It's very crucial. Gold did not trade above 1400 since 2013. And as I said again, gold is overbought on the three main functional charts. Such a move most likely is going to be shot by the bears. For that, we advised you to close your buy above 1400, then to step away from the market, so we will be able to assess if the rally, if the bulls are going to be able to keep the prices within range or no. We will be moving now to the economic calendar. On the economic calendar for Monday and from the United States, we will be waiting for the following economic headers to be released from the United States. We will be waiting for the Chicago Fed national activity for May and Dallas Fed MFG business index, both with low importance. Also, there are some important economic headers to be released from German and other European countries. That's all. We will be moving to the technical indicators. On the last trading session of Friday, we have had a trading range from 1382 plus to 1411 plus. Market is closed and numbers are rounded. For the closing price, gold spot printed a closing price above 1399 on the last trading session of Friday. For the gold futures delivery of August, it already made it above 1400. For the daily simple moving averages, gold is trading in a bull trend above its all daily simple moving averages. For the RSI, 30 minutes is 58 bullish with positive momentum, and for the RSI for the 1 hour, it's 59 bullish with positive momentum. For the 4 hours, it's 71 overbought, and for the one day RSI is 85, extremely overbought and extremely pointing to a correction. For the supports and resistance, we have seen buyers around 1389 and 1377 and 1370. For the sellers, we expect their appearance about 1411, 1419 and 1434. That's all for the technical indicators. We will be moving now to the trading strategy. Technically, gold is trading in a bull trend above its daily simple moving averages. The RSI readings are overbought on the 4 hours and the 1-day chart, with extreme reading on the 1-day chart. From a pure technical point of view, a correction is overdue and the rally is under threat, a serious threat, if it keeps going without a proper consolidation. A run above 1420 will be shut down easily by bears, and it could have bad consequences on the already exhausted trend. Fundamentals and sentiment. Markets is driven by sentiment. People are buying gold for the anticipated rising tension between the US and Iran, and for the other fact that the Federal Reserve Bank is about to reduce interest rates. This means the Federal Reserve Bank is expecting a recession. This is what the market is understanding. But for how long this sentiment would be fueling the rally, while technically gold could face a correction, this is what we are going to know in the coming few days. For one more thing also to mention, that the market participants will be paying attention the coming 2 weeks for the progress on the US-China trade deal or trade talks, and also the rising tension between US and Iran, and also for the very important thing, the NFB, which will be released by 5th of July. So if the trade talks breaks down, for if the tension between US and Iran increases, and if the NFB is also disappointing, most likely gold will be extending the rally toward 1700. For the trading idea, I do advise you not to take a position on the market opening. Let the market trade for a few hours to digest the news that we got in the weekend. Technically, gold is extremely overbought on the 1-day chart, and a correction soon will be a must. As I said before, gold market is driven by sentiment, and also the US dollar is not doing so much fine. US dollar is trading below its daily simple moving averages, and the next support is about 95-200. So there is still another expected drop of a half figure. So if gold bulls attempted to move up, they will find resistance about 1411. If it broke, there will be a spike in the market, will push the gold under $10 to $15. We may sell there about 1,320 to 25, with a target of 1,400, 1,389, 77 and 70, and the stop loss 1,334. If gold traded softly, it will start most likely a smooth correction. We will start buying dips a small amount, and then we'll double it on each $10 drop, and we'll take a profit about $20 from the average cost. We are watching closely the US indices for the fact that it's priced against the US dollar. US indices right now priced at discount. We see an opportunity in the Dow Jones index for targets of 29,000, then 32,000. Start with a small position and add more on each dip. Put it this way, you are among drunken people, and you will have to remember to leave early before things get messy. Dow Jones shouldn't find acceptance below 25,800. Above this level, it will be your accumulation range. That's all for today. Thank you guys for watching this video. Please, with your support, this channel can grow more and more. Share, like, and subscribe, and I will see you tomorrow in another video.